Most people lost money this month, not because the market crashed, but because they panicked at the wrong time. 4 weeks straight, markets dropping, everyone nervous, headlines screaming recession, inflation, war. Then one update drops, and suddenly everything flips. Stocks shoot up, oil drops, and the same people who were scared yesterday are confident again today. No deal signed, no confirmed resolution, just words. And that was enough. It's like watching someone panic and run out of a building, then sprint back in because someone said the fire might be gone. No plan, no structure, just reaction. And this is exactly how most people move in the market. Up, they chase. Down, they freeze. Repeat for years. They're not investing. They're reacting to headlines like it's breaking news on their phone. And the market feeds off that behavior. So before you even think about where to put your money, you need to understand what's actually happening here. Because right now, most people are getting played without even realizing it. One conflict in one region nearly shook the entire global economy. That's how fragile this system actually is. About a month ago, tensions kicked off in the Middle East, and instantly, oil prices jumped, inflation fears jumped, recession fears jumped. Everything moved at once. Because oil isn't just oil. It's transport, food, energy. It touches everything. So when oil goes up, everything goes up. It's like pulling one wire and the whole system starts shaking. And investors saw that risk straight away. Not just higher prices, but what comes after. Because if inflation spikes again, central banks don't cut rates, they raise them. And that's where things get painful. Higher rates, slower economy, weaker businesses, job losses. That's the chain reaction people were scared of. Not just a war, but what that war triggers across everything else. And most people, they don't see that. They just react to the headline. Investors weren't scared of a crash. They were scared of something worse, a repeat of the 1970s. Back then, inflation was already high. Then oil prices exploded because of conflict in the Middle East. So now you've got a double problem. Prices rising and then rising even faster. It's like your rent going up, then your food doubling, then your energy bill jumping on top of that. Everything stacks. And the only way to slow it down: higher interest rates. Aggressive ones. We're not talking 5%, 6%. We're talking 15, 18, even 20%. Imagine trying to buy a house with a mortgage like that. It's like trying to run while someone's pulling you backwards. That's what kills the economy. Businesses slow down. People stop spending. Jobs disappear. So when this situation started building, investors weren't just thinking markets might dip. They were thinking, this could get ugly. And that fear is what started driving the sell-off. The entire market just changed direction. Off one expectation, nothing confirmed, nothing signed, just the idea that things might calm down. And suddenly, everything flips. Because if this conflict eases, oil pressure drops, Inflation pressure drops. And now central banks don't need to panic. Which means instead of raising rates, they can go back to cutting them. And that changes everything. Lower rates, cheaper borrowing, more spending, more growth. That's fuel for markets. It's like easing the pressure on a system that was about to crack. But here's the problem. This whole move is based on if. If the conflict ends, if tensions stay low, if inflation cools. That's a lot of assumptions. And the market, it's already reacting like it's guaranteed. That's like celebrating the win before the game's even finished. And that's where people get caught out. If you're trading headlines right now, you're basically gambling with extra steps. One post, market's up. Next update, market's down. And you're sitting there trying to react faster than the news cycle. That's not strategy. That's chaos. Because this market is moving on expectations, not reality. Nothing's confirmed, but prices are already moving like it is. It's like betting on a match based on rumors of who might win, instead of the actual result. And you will get caught out doing that. Because by the time you react, the move's already happened. You're always late, always chasing, always guessing. And the market loves people like that. Because emotional traders are predictable. They buy when things feel safe and sell when things feel scary, which is exactly backwards. So if your whole strategy right now is reacting to headlines, you're not investing. You're just guessing with confidence. Right now, half the market is winning, and the other half is getting destroyed. Same economy, same headlines, completely different outcomes. Energy stocks up big, software getting hit, financials struggling, semiconductors moving differently again. It's not one market anymore. It's multiple games happening at the same time. And if you don't understand that, you'll get confused real quick. Because this isn't just about war or rates. It's also about technology. AI is shifting everything. Some companies are benefiting massively. Others are getting replaced or left behind. It's like watching one side of the street being built up, while the other side gets torn down. Same city, completely different reality. And that's why you can't just say the market is doing this. Because depending on where you are, you're either making money or getting wiped. And most people don't even realize which side they're on. The people who made the most money bought when everyone else was running away. Not when things felt safe. Not when headlines were positive. But when everything looked like it was falling apart. 2020, markets crashed fast. Panic everywhere. People saying, wait, it's going lower. Then what happened? Fastest recovery we've ever seen. 2022, markets dropped again. Same fear, same excuses. This time it's different. Then markets recovered again. 2025, multiple crashes, back to back. Same reaction, people waiting, hesitating, overthinking. Then markets hit new highs. This cycle repeats. And most people keep making the same mistake. They wait for the perfect time, which never comes. It's like standing on the sidelines, waiting for the exact moment to step in, and missing the whole game. Meanwhile, the ones actually building wealth keep buying through the noise, not guessing, not timing, just consistent. Because they understand something most people don't. The opportunity is in the panic. The biggest mistake investors make isn't picking the wrong stock. It's reacting at the wrong time. Because right now, the market is being driven by emotion, fear when things drop, excitement when things bounce. And most people just follow that cycle without thinking. That's why they lose. Because they're not making decisions based on logic. They're reacting to how things feel. And feelings change fast. It's like being in a crowd that starts running. You don't even know why, but you run anyway. That's how most people move in markets. But the ones who actually build wealth, they do the opposite. They stay calm when others panic, and they act when others freeze. Not because it's easy, but because it's proven. Markets will crash again. Recessions will happen again. Fear will come back again. That's guaranteed. What's not guaranteed is how you respond to it. So the real question is simple. Are you reacting or are you operating with a system?